Today we're going to talk about what's going on with the stock markets. I'm going to show you on the chart what's happening and I'll explain some things. I also want to show you an email that CNBC Pro sent me. They send me about 2 or 3 a day, which is getting a little annoying. I want to show you as a retail investor, that's you and me, what you're up against and how they position things. And that's all going to lead into my summation, talking about the effect that the cheerleading of the stock market has on retail investors and what decisions they make. For many of you, this is your very first time here. My name is Peter Leeds, and I am a small stock specialist. The reason I focus on small stocks is because they produce the greatest gains if you know how to find the good ones. And always remember that nothing we say ever is intended as personalized trading advice for you. And someone asked the other day, is that a piece of the Berlin Wall? Behind you there on the desk, good catch. Yes, it is a piece of the Berlin Wall. And also let me show you 2 other things really quickly. Look what I found. This I found not just now. I found it a couple months ago, but I thought I didn't have any of these. That's one of my first books. And that's me at Grand Central Station, photographed by Michael Paris. So if you're ever in New York, you need a photographer, he's the one to go to. And this is a letter from Lloyd. Yes, Lloyd, thank you. Look at that. Who sends letters anymore? Lloyd does, and I love when he sends a letter to me. And he even says in the letter, you don't need to use it in the video. Joke's on you, Lloyd. Joke's on you. And just before we get into what's going on with the stock markets, some things I want to show you. Check out this email I got from CNBC Pro. And look what they say here. Check out this week's top 10 stories. Tom Lee just made a bunch of new stock recommendations. Goldman Sachs says these stocks have potential upside of over 60%. Analysts are most bullish on individual stocks in over 10 years, especially these names. Goldman says buy these 4 oversold megatrends right now. Leon Cooperman says he's still invested even if the recession is likely in 2023. Here are his top picks. The biggest analyst calls of the day. Goldman is worried this could be like the 1970s and is recommending these stocks. Do you see a trend? You see a pattern there? Everything is about what to buy, what to buy, what to buy. No matter what's going on with the stock market and no matter where it's headed. It's all about, okay, retail investors, everybody put more money into certain types of stocks. Everybody buy this stock, buy that stock. I feel bad for you if you're a retail investor and you're just getting started and you're just learning about how to invest and you start seeing this stuff. You're going to believe that the things you see on CNBC must have some kind of weight or value behind them. But no matter what, no matter how the market's going, where it's headed, it's always going to be talking about what to do now, where to invest now. What about don't invest now? What about take a step back, take a breath? What about have some cash on the sidelines for what is going to come? Now we'll start with a 1-year chart of the Dow Jones Industrial Average, just to start off pretty easily. And you can see right there is where we went from expanding delusion to declining delusion. And no matter what, that was the date right there. You can see this is a measured, sustainable, controlled growth rate in terms of the value of the Dow Jones Industrial Average. And from that tipping point there, everything is sort of broken down a bit. But let me zoom in so I can show you something a little bit more clearly. Go into a 3-month chart here. And this is the morning star pattern based on the way that I look at it from our 33 profit patterns course. Well, you'll notice this is the Dow Jones Industrial Average, and you'll see with the 3-month chart here how every day leads into the next day. There's no gaps. There's not a lot of volatility. It's a pretty solid, tight transition or line of where things are going. While the market has been coming down lately, I would say that this is a healthier chart than if we go and look at something like, for example, the NASDAQ. Here's a 1-year chart of the NASDAQ. And there's your tipping point right there. This is leading up for years to that point, and from that instant onward, everything is being more volatile, more uncertain, and the market feels like it's overall breaking down. If you look at a 3-year chart, it had one trend for a while, and then everything got a little bit more uncertain. But I'm going to zoom in real close here, and if you guys don't understand these charts, this is Japanese Candlestick Trading charts, and it shows you the psychology of investors, what investors are thinking. For example, that right there is an evening star pattern, very negative. But what we've seen over the last 3 months with the NASDAQ is it had a recovery period here, and everyone got excited and thought that the markets were going to do really strongly again, calling for new highs going forward. That's not a possibility anytime soon. But here's what I wanted to show you. There's a couple of gap downs here, and gaps are showing you a more uncertain market. Actually, I'll zoom in even more. And all a candlestick chart is showing you is if it's clear, it opened and closed higher. And if it's a full candlestick body, it opened and closed lower. It opened and closed lower. Clear means it opened and closed higher. The wicks are just showing you how high or low it traded during the day. It's literally that simple. Don't act like you don't understand this stuff, please. But when you have a gap, what that's telling you is that people are not certain about where things are headed. And that way you should be looking for setups and opportunities on the trading chart, which is exactly what I talk about in the Candlestick Trading Chart course. And that's why I captured that 85% gain on a one-day trade on JP Morgan. Because you spot things that are telling you there's a trend reversal pattern, there's indecision among investors. There's a lot of candlestick setups that are incredibly bullish and a lot of other ones that are incredibly negative. And you can spot some of these patterns, these setups, and take an action based on that. And generally, your probability of having a winning trade is a lot more likely. But overall, with the way that they're cheerleading people to get into the markets, the way that people have a short memory, then the markets go up a little bit and they think that we're all back to the races, all of this is distracting people from what's really happening. The markets have changed in terms of their delusion. They had maximum delusion, and now that's going away. And as that goes away, there's going to be a lot more financial pain. We're not done yet. We're not out of the woods. Stop acting like we're out of the woods, because I know a lot of people are, especially CNBC. Here's one of the things I told you about years ago, that governments will do what they always do. They will tax and they will regulate, and now you're seeing it. Here's the very important part. The Biden administration also wants to explore a digital version of the dollar, the CBDC, the central bank digital currency. 16% of Americans have invested in, traded, or used cryptocurrencies, the White House said in a fact sheet. And the central bank digital currency is going to be kind of like a beginning of the end for the currency. They have way too much power with it. They'll control you. They'll be able to tax you differently and more aggressively. It's not a good situation for any nation to have a central bank digital currency run by the government.